Mark, let's talk about the markets in 3 minutes. And let's start with what we saw in the United States yesterday. Now, I know we're going to talk later on about the one day to expiry options and the role that they played. But, of course, we've rallied a long way. 9 days of gains for global stocks. The US very much playing a part in that. We've seen a new high on the NASDAQ 100, on the Dow. The S&P wasn't all that far from it. So were you surprised by the pullback that we saw in yesterday's session?
I mean, yes, very much surprised, because there was no real seeming fundamental catalyst. You know, that said, we come a long way very quickly. But I do think this is just a short term, as I called it, the kind of the top of the show, speed bump, a hiccup. I think that overall, until we get some fresh fundamental data in the new year, that either is showing that, you know, data is holding up strong enough and therefore the Fed cannot be cutting rates, or perhaps that growth is slowing down really, really quickly, and therefore that would be negative for equities. I think that equities will rebound from this. I don't know where they trade today. I don't know. It's not a prediction in the next 48 hours, but I think that as we go into January, stocks will be higher again, and this is only a short-term disruption.
What do you make of this outperformance by China? Some of our colleagues pointing towards some housing sales data out of the Chinese market or certain cities within China. But given we've had some potentially negative news flow surrounding US-China relations, interesting to see that China is outperforming today.
Yeah. I cannot give you a logical explanation for it. I think it's pretty confusing. And sure, you want to point to some of the city data on housing, but there's been so many other positive headlines this year that have been ignored. I think, again, that reflects the fact that we're in illiquid markets, and some of the consensus positions are getting kind of, people are, you know, unwinding those positions, whether it's taking profit or stopping out at this time of year. You're just like, there's no point having risk going into Christmas. And we know that one of the most consensus views out there from foreigners is to be very, very bearish China. So I think it reflects a little bit of that rather than anything fundamental changing.
OK, and just to get back to some of the, I mean, we're not getting a great deal of corporate earnings right now, but we are seeing some. And FedEx has been a big story of this week. It's interesting because there are some very specific issues to do with post-pandemic and some of the competition coming back to take on FedEx. But I wonder how this struck a chord with you, Mark, if at all, because some people do watch the logistics sector as something of a leading indicator for the global economy.
Yeah, I do think that's important. And, you know, the other dynamic that obviously it's coming back in the radar when you talk about logistics there is because of what's happening in the Red Sea, is we're kind of thinking about supply chains again. In fact, it does make me kind of have a bit of a flashback of a few years, because when I asked someone this morning, what happened in India stocks yesterday? They were like, oh, COVID's spreading. And I kind of laughed because, I mean, we didn't see COVID, even though it was really, really bad from the humanitarian side in India a few years ago. It didn't derail the Indian stock market. So I think it's a bit ironic to point to it as the reason we sold off yesterday. And similarly, we're suddenly getting very excited about supply chains. I think all these things are only temporary distractions. They won't be the big drivers for 2024. But yeah, I watch logistics for the consumer mainly rather than supply chains.